last video wasn't the volume wasn't up, wasn't great. But I think you guys still left questions, and I do want to answer some of these. So the first thing I want to talk about, so I want to talk about the different account types with Degiro. I also want to talk about how to short stocks, the difference between shares and CFDs, and how you can utilize that on this, and also my feedback of the platform and of the company itself. So I'll just start off with shorten. Um, Shorten basically, I'll say to you straight away, is that it won't let you short U.S. stocks. Simple as. The company does not let you short U.S. stocks, no matter what cap they are, high cap, small cap, it won't let you. However, they do give you the alternative of shorting the CFD, which you can short instead of buying the share, short in an actual share. You can short the CFD of that company. For example, you can't short Apple shares, but you can short the Apple CFD. And I'll go into that later on. But what you can short is that you can short U.S. stocks, UK stocks, and you can as long as they are high cap stocks. Like for example, Kerry Group, it's an Irish stock. You can short that because it's a high cap stock. But you can't short mid cap shares like even if they're UK. So the only shares that you can short are European shares that are high cap companies. Um, and the way to do that is, for example, let's say BMW, that's a high cap stock. Um, you click on that just like I showed you, and the way to do that is basically, here we go. You press the sell button instead of the buy. So the difference is if I have securities of BMWs already, securities just mean shares. If I have like say 100 shares of BMW already, and I press the sell button, obviously they're gonna sell the 100 shares that I already own. But if I have nothing and I want to short it, I go sell instead of buy. I click sell, um, and I say 100 shares. Let's say I want to short them at the market order right now because I feel like this is gonna go down to 78. I put 100 shares, market order, sell, place the order. That's gonna short. That's gonna reflect here as a minus 100 shares, which means I've just shorted the shares. And if I want to get rid of them, I want to take my profits at 78 after has gone down. I go back, I click buy, and then I put in 100, number 100. So when this went down, I want to profit at 78 because I already shorted at 78.70. Shorten means that I want to profit on the downside of the trend when the price goes down. When it hits 78, I want to take my profit of 70 cents. 70 cents by 100 is 70 euro. So now it's going up. So I click buy instead of when I want to close my position. Buy market order 100, place order. This will buy the shares that are already shorted, and it will give me back my profit of 70 euro. Um, so that's how to do the selling, the shorten, and how to exit out of the short position is to buy. So shorten is a sell position as long as you have zero securities. If you have say 50 securities already and you press a sell, that's gonna sell the securities that you own already. So, but if you want to kind of if you wanna short it, it will be minus 100 securities. If we wanna minus 100, short 100 shares. But like I said, it's only high cap stocks that you can short, and not U.S. stocks. So that's shorting and buying. Now, like I said, you can't short. Sorry, you can't short U.S. stocks. But what they do give you is a CFD alternative. A CFD is just a contract of difference. Um, so it's just like like for example, I can't short Apple stocks because it's a U.S. stocks and Nasdaq stock. But what I can do is go down here and use the CFD to short it. The CFD basically is a share that you don't own. It's just a contract of difference that says I'm gonna buy it at this price. I'm gonna benefit from the fluctuation of this price, um, just like you would in buying and selling shares. But it's just a contract of difference. And it works the same as buying and selling on this platform, buying and selling shares. So you can also buy a CFD, but just means that you don't own the shares, so you won't benefit from their dividends or anything. You're just benefited from the fluctuation of the price. So you can actually short Apple right now. If you click sell, say market order, 100, 100 shares of Apple, place the order, that will short the Apple shares of 100. So instead of shorting their shares, which you can't on this platform, you can use the CFD to short their shares. So I think that's clarified. And the same thing when you want to go back, exit the position of short, you just buy back the CFD. Make sure you buy back the CFD, not the shares, because that has different effects. So that's the difference between a CFD and it basically works the same thing as buying shares, normal shares, not a CFD. It works the same thing. And if you haven't seen my previous tutorial, look at it because it shows you exactly how to do it. The bugs on the platform. Um, Actually, no. I'll go back. I'll save the worst for last. I want to look. You see here it says trader. That's my account type right now, and I'm pretty sure if you looked at that before. The trader means that they're giving me leverage, so I'm using their money as well as my money to buy shares. You can't do that with a basic account. The difference between a basic and a trader is that a basic account won't everything you lose, everything you make, it's yours. So you're not using their money. But a trader, they give you 70% leverage of your capital. So they use your basically it's a loan um, that you can avail to by upgrading your account type, and you can just do it by clicking adjust, and you can read about it there. When you don't have to contact them, you can do it straight through this, and you'll see that different the you'll see that you'll have more money. So when you, for example, deposit 5,000 euro, they'll give you another 3,000 on top of that. So that will be 8,000 altogether that you can use to trade. But obviously that is a loan. If you lose everything, you'll have to pay back 3,000. So that's the only risk between that. Obviously, you do pay interest. I think it's 4% or 1%. You'll have to check that with them. Um, Now I'm not gonna hype it up. I don't want to say all the good things about it. I do. There is bugs on the platform. It is a cheap platform. They invest heavily in the gaining clients than keeping them, obviously. Uh, but it is an execution only platform. It does the job. It is trustworthy. You get your money back when you withdraw back to your account. Deposit is the same thing. It is trustworthy. I've been with them for 2 years now. But yeah, it is a company that I'd start off with. But if you're kind of trading, over, half a million, I wouldn't kind of. I'd be looking to get into a company like, especially if you're trading to hold stocks. I'd be looking to go into Davies and whatnot, and no matter what fees or commission they charge, it doesn't matter. But if you're trading that much amount, I'd be looking to go in with them. But if you're trading like under 15, 20, I'd 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 use this platform. You know, it's not much of a risk. It's just for my. It's nothing bad. It's just so I can feel safe. Knowing that especially for Irish clients and UK clients, I feel safe going to sleep knowing that my money is safe in a company like Davies. Until Degiro actually proves itself to be, um, a company that is with high customer satisfaction, then for now I just go in with low capital. But yeah, so hopefully that really answered your questions. Look at my other tutorial if you want to know how to use the platform. Um, all right, thank you. Any comments? Let me know. Any questions? Let me know.